Welcome back, ladies and gentlemen, to Nocera's channel, globalizing, recirculating aquaculture systems, ensuring you clean water and clean fish. Joining us, Jeff Chang, the Chief Executive Officer, is going to take us through a high-level overview of his just the financials, balance sheet growth, some of the recent acquisitions, and what we can kind of look at moving forward. First and foremost, welcome back, sir.
Good morning. Thank you, Kyle.
Morning, sir. So let's get right into this. Fascinatingly enough, your net sales grew in Q1 to 3.8 million from 2.9 million the year prior, with an increase in gross margins around 68,000. This growth is pretty great year over year, considering how tumultuous the market's been. You're still operating at a loss, kind of in this growth phase. Do you want to kind of just talk about the growth that you're currently seeing in your revenue?
Yes, mainly because our growth is mainly because of demand for fish is continuing to grow, and we are trying to move from the B2B market to the B2C market as we in the second quarter when we started entering China. So in the B2B market, we're operating at a loss because we have a very low margin. It's about 1 to 5%. So once we move from B2C to B2C, our margin will be around 20%. So that's where our focus is on for 2023 so far. And so we're going to see a little bit, or a steady growth, or not very much increase in the B2B market, but we're going to see a huge increase in the B2C market in China. So that's where we're heading to right now. And a lot of our losses is due to non-cash flow expenses. It's where we issue like stock options, stock warrants, and stock compensation. Then we had to run through the expense. So actually, we are operating at a very low burn rate compared to some other NASDAQ firms. So in Q2 and Q3, we should see some improvement, and hopefully in Q4 we're looking for try to break even or narrow that loss down to like double digits or something. Yep.
Yeah, that's incredible. I appreciate the insight there. I mean, you were sitting on, from the balance sheet perspective, 7.7 million of assets, of which about 1.4 million cash for the first quarter there, against about 1.4 million liabilities. It's nice to hear that you're kind of here heading toward a break even this year. But how do you kind of just feel about your balance sheet in this more tougher market environment?
As we just got listed last year, because we did a small IPO round, and because the recent market pressure and market pullback, so we kind of delayed our equity financing for the year until we feel that it's a better pricing point for us. So currently, in terms of the balance sheet, we were recently contacted by one of the Michigan fish farm company. They were talking about selling the project to us. It's like $100 million of bond that could be issued, in the next 2 years. So we're also considering that project as well. And also entering China will bring in like steady cash flow from, as we start to consolidate, more entertainer, more chef, and more, sales team. We're going to see continued growth on monthly months starting from June. So our balance sheet will build up. So by end of the year, we should see our balance sheet increasing and cash flow increasing. I would say at least about $1 million or so by year end.
Yeah, it's great to hear. And you're kind of giving us a lot of insight here into what we can expect through the latter half of this year, again, from breaking even, getting the balance sheet kind of a little bit better, moving from B2B to B2C. But, just kind of reiterating the question here, what should investors kind of focus on in 2023? We did recently talk about the acquisition of that live streaming company. Do you want to kind of just talk about some of the stuff maybe you're focused on, or just what do you think investors should most fixate on here?
So basically, people always ask us the questions like, what does Nocera do? Right? We started as an equipment company. We built fish farms, and we got into the wholesale and retail market. So where we see opportunity, we'll try to capture it. So in the U.S., we'll still try to continue to build our fish farm and start selling fish in 2023, 2024. And in Asia, where the Douyin and TikTok market is so hot right now, we're going to focus on that retail part of where we can sell our seafood, food products through that channel. And then in quarter 3 or quarter 4 of this year, we're also looking for opportunity to consolidate another like central kitchen that makes pre-made food that is going to sell directly to the Chinese market. So instead of buying some food product from other supplier, we're going to become the manufacturer of some of these companies. So looking to consolidate or acquire, one of these companies in quarter 3 or quarter 4 of this year as well. And that will add to our cash flow. So in terms of our investors, I wouldn't be surprised to see improvement in our stock price. And I wouldn't, there's a potential, a lot of growth in our sales revenue and the company as well. So we see a lot of potential growth coming forward in Q3 and Q4 this year.
All right, I'll pass the question off to the viewers. We'd love to know what you think about all of this in that comment section below. And perhaps we can do an investor Q&A down the road. And definitely consider subscribing, because when these catalysts and news continue to hit the wire, we're going to bring it to you here. But on that, as always, we look forward to catching you in the next one.
So thank you, Kyle.